Thank you, Mark, and a big hello from London. Much fewer technical patterns seen last week. In fact, there were only 3 weekly key reversals seen in the markets I cover. The first was in the sugar white premium spread, where we had a weekly key reversal down, but not just any old weekly key reversal down. It was a counter to the counter weekly key reversal down. This has been the latest piece of action in what has been a quite actively patterned market. You see, there have been 2 big picture items here. There was the recurring big old bullish Andrews pitchfork from 2019 to 2021. That's highlighted in blue. A pitchfork that had been previously breached but then mended. And the ascending expanding wedge pattern, highlighted in red. That's been formed since mid-April. This one is not a pretty pattern, but it's still there. A subpoint has been the monthly key reversal down in September. Despite what's happened since, which seems to justify this monthly pattern, please still take this monthly key reversal down with a huge pinch of salt, as an earlier monthly key reversal down here in July did not work out so well. Nevertheless, this one seems to be genuine. Then we have the most recent activity. Last week's counter to the counter weekly key reversal down. They're offset by a country mile the previous week's immediate countering bullish engulfing pattern. This is because in the process, the market reached down to the 102 even target area. That's the primary target for the same ascending expanding wedge pattern I've spoken about earlier. We now have the harder to reach secondary target for this pattern, down in the 46 3/4 zone. However, to get to this secondary target, prices will need to overcome 2 key supports. The lower time, currently at 80 3/4, to the big 2019 to 2021 bullish Andrews pitchfork, and the neckline, currently at 75 3/4 and highlighted in pink, of the February to September 2020 head and shoulders top. If you wish to know more on this, please listen to my video commentary of the sugar market this week, where I cover all these in more detail. Next, I'd like to look at the weekly key reversal down in the New York cotton futures. This comes 3 weeks after a weekly key reversal up here and is easily governed by the congestion seen above between 86.84 and 89.97, which the market tried to pierce last week but failed to do so. This week started well with a pretty good follow-on lower to last Friday's close, but the hesitation under the last 2 weeks' action these past 2 days may be suggestive of a possible accumulation of ammunition for the next move. The question is whether the market retries the 86.84 to 89.97 area overhead, or drops down to the lows of last month. Finally, there was a weekly key reversal up in Chicago live cattle futures last week. This had a nice follow-on higher on Monday, a small gapping move up to new highs and also a high close not seen since January 2015. However, yesterday's action filled in that gap, and we wait and see if there will be any continuation to this weekly pattern. As always, I'm happy to share my videos, various charts, and answer any questions with anyone who wishes to contact me. And with that, I'll finish this section from London. I hope you found these comments useful.